Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It's August the 11th, 2017, and this is the Daily Report for Gold and Silver. Our weekend review, and what a week we have seen, with gold moving approximately $40 from the intra-week low at 57. Market closed today at $12.95. Another nice surge up about $5.30. Silver had been trading lower for the better part of the day, but has shown tremendous gains in value over the week. Still trading over $17 though at $17.07, and as I said, in essence unchanged. We had dramatic downside action in U.S. equities yesterday and a modest recovery today. Dow Jones Industrial Average still below 22,000 at 21,858, but it did gain about 14 points on the day, a gain of about 40 points in the NASDAQ Composite at 6256, and the S&P gained 3 points at 2441. Gold continues to get bid up as we go into the conclusion of this week's trading. We have gold closing near the high of the week, if not the high itself, as it currently trades at $12.9730, high on the day being $12.98. We are just within striking distance of that elusive 1300, and I think more significant than that is we do now have gold trading to a new high, a new record high for the year of 2017. When we consider these most recent tops, here and here, the market would have closed in this area. Even the open itself comes in shy of 1300. And the fact of the matter is, all things being equal, I do expect this trend of higher precious metals prices to continue into next week. And traders, if you recall from last weekend's review, I had been under the belief at that point that it was a matter of positioning ourselves, but that this seemed to be a time to absolutely look to get into the market. One of the things we were looking at was the fact that 62 had held 1262. And if you recall, on Tuesday afternoon, we sent out a special trade alert recommending that our subscribers enter gold positions from the long side. Traders taking that call got in roughly at 1270. It was on this candle here, and the market continued to track higher throughout the day, actually closing up near 1268. Now, since then, we have had 2 days of sharply higher pricing following that dramatic move up on Wednesday, this being Wednesday, Thursday, and Friday's move in the marketplace, culminating with today's sharply higher pricing, closing at a new record high on the year. And traders, if you recall, when we initially put the trade on, we entered the trade, as I said, roughly at about 1269.90, 1270, and initially we put our stops just below 1255, right in this area, to account for the low that just preceded that. This morning I sent out another trade alert, and I recommended that it was time to move our stops up. We've moved them from below 1255 to where they sit now, which is below 1280. Now, the rationale behind moving it to 1280 was, at first, when we look at this basic fib retracement, it is a long retracement. You can see the 61.8% retracement area falls at 1280. Let me go in and show you what we're looking at for the entirety of this particular retracement. I'm looking at the high that was achieved last year when the market traded roughly to 1380. That's our top. It goes to the lows that were achieved at the end of 2016, beginning of 2017, when gold prices touched approximately 1120. And that gives us our different levels, our 23, our 38, and then here is our 61 and our 78. My sense is that this particular area, as we talked about, was former resistance in the market, and now it should become support. We can see that in terms of a technical basis, in that these recent highs stalled right in that area. So by placing your stop just below 1280, I believe that if the market continues to move higher, which is my current assumption next week, we should be protected and we have locked in a small profit on the trade. My recommendation is obviously to maintain your long gold position and to maintain your stop just below 1280. And traders, if you recall from last week's weekend review, we had a pretty sizable spike in the dollar. That's this green candle right here. But if you recall from my commentary, my sense was that as this market moved down, we saw the market spike up a little bit. And I believed at that point, as I still do, that in essence what we were looking at was a dead cat bounce. And we would see the market spike up before moving to lower pricing. My target is still 92 or below on the dollar index. Traders, as we went into the beginning of the week, we had an inclination that things could get real shaky, especially with the current war of words that exists between North Korea and the United States. That continues to ratchet itself up, and as such, we have seen the safe haven play be the play that has produced the greatest gains in terms of value this week. We put a position on going long December gold on Tuesday. We got in roughly at 1270. Market is roughly $25 from there as it stands, closing at 1295. I do believe we will see higher pricing. This morning we sent out a special trade alert recommending that we trail our stops up to just below 1280. As I said, let's maintain our longs, maintain our stops, and we'll talk to you next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Have a great weekend. Bye-bye.